Elizabeth Gaines, welcome to The Business and congratulations on the result.
Oh, great to be with you, Catherine, and thank you very much.
A very strong result for Fortescue, driven by the iron ore price and record shipping volumes. Just how long do you expect this demand for iron ore to last?
Well, we continue to see very strong demand for iron ore, and you're right, we did optimise the market conditions in the financial year 21. We shipped 182.2 million tonnes of iron ore. We're a low-cost producer, and as you can see from our results, with a $10.3 billion net profit after tax, which is up 117%, we've certainly optimised the current market conditions. In terms of the current market, we still see strong demand for iron ore. Whilst we've seen some slowdown in crude steel production in China, it is still up 8% compared to last year for the 7 months ended 31 July. So we're continuing to see strong demand for iron ore. The current benchmark price is around $157 a tonne, and for the financial year that we just reported, the average for the full year was around $154 a tonne. So we're still actually a bit higher than the average for all of FY21. So we're continuing to focus on the things that we can control. We've guided to a range of iron ore shipments of 180 to 185 million tonnes this year, a low C1 cost, and we'll continue to generate very strong margins regardless of where we are in the cycle.
Well, Elizabeth, we've seen the iron ore price tumble almost 40% in the last 2 months. China has declared a tougher stand on emissions and output out of Brazil is ramping up. How will this impact on Fortescue margins, and are you confident that they can be maintained?
Well, we continue to generate very strong margins regardless of where we are in the cycle. We know this is a cyclical industry. And whilst iron ore prices have moderated from a high of around $230 a tonne, at the current levels of $157 a tonne, that's still above the average for all of financial year 21, against which we've just reported record profits of $10.3 billion. So we're in a very strong position. We are a low-cost producer, and that's critical as we go through the cycles. Being a low-cost producer and having an industry-leading cost position means that we can actually generate very strong margins throughout those cycles. And actually, over the last 5 years, our average EBITDA margin per tonne has been $50. Now, for the financial year that we reported today, it was $99, so clearly that's a very high margin. But the average over 5 years is $50 a tonne, and that has generated enormous shareholder value. We've paid out 70% of our overall NPAT over the last number of years in dividends to our shareholders, and for the year that we've just reported, we've paid out 80%. And that is a total dividend of $3.58 a share, and is an outflow of 11 billion Australian dollars to our shareholders.
Just before I move away from the iron ore story here, where do you think China is heading with respect to demand for iron ore?
Well, we continue to see strong demand for iron ore from China. Crude steel production for the 7 months to the end of July is up 8%. We think there'll be some moderation this year. It may not land at 8% increase year on year for this calendar year, but we do expect that crude steel production will still be slightly above last year. And against that backdrop, we still continue to see very strong demand for iron ore. We do expect also an uptick in terms of crude steel demand in the fourth quarter of this year as construction activities improve and increase.
You announced today that you'll be providing information shortly on targets for Scope 3 emissions, essentially the pollution from your customers. Dr. Forrest today said that setting these targets without a strategy on how you can help your customers decarbonise is pointless. So it follows that you must now have, or at least are very close to, a strategy. Can you elaborate on how you plan to help your customers decarbonise and what challenges you've faced?
Well, we're already on a pathway to be carbon neutral by 2030, so that's in our own emissions, so Scope 1 and 2. But if Fortescue is carbon neutral, that means we're actually producing iron ore that is free of emissions. So that in itself will be a big contributor to the reduction in Scope 3 emissions for that iron ore that's used by our customers. And we expect we'll get a premium for that product because it will be carbon neutral. So that's a big contribution. We're also looking at green iron, and we've invested in research and technology on the production of green iron. Again, another potential contributor to that reduction in Scope 3 emissions. And some of the work we've been doing on green fleet is testing the use of ammonia for shipping fuel, and shipping is actually also a significant contributor to Scope 3 emissions. So replacing diesel with green ammonia for shipping, as well as our own goal to be carbon neutral and producing green iron, all of that it will contribute to a reduction in Scope 3 emissions and is a really practical pathway. It's not a sort of subjective pathway without knowing how we're actually going to achieve it. We know that there are a number of key pillars, whether that's the reduction in shipping emissions, whether it's production of green iron, or also our own product being emissions-free. They will all contribute significantly to a reduction in Scope 3 emissions.
Well, we know that green hydrogen is a huge part of Fortescue's future, but in order to commercialise green hydrogen, there's a common view that government investment is critical. Is our government doing enough to support this goal, and can you do it without any of this sort of investment?
Well, business is getting on with the challenge of tackling climate change, and there is no doubt, and Fortescue's, I think, leading the way in Australia in terms of our views on the opportunity for green hydrogen, not only as a way to decarbonise our operations, but also the creation of a significant export market. I think, government, we need the right settings in place. We need policies that support this investment. We're ready and willing to make these investments. And I really do think that business is getting on with it. I think government has been slower to respond. There is quite a lot of activity underway, and certainly in Western Australia there is now a Minister for Hydrogen. So there is a recognition that this is a significant opportunity for Australia, but we need business and government to work together to make sure that we can optimise this opportunity, because it is a generational opportunity to create a new export market for Australia for the benefit of all Australians.
So, Elizabeth, what government policies and leadership strategies do you need to achieve your environmental goals?
Well, we need strategies and policies that support the introduction of large-scale renewable energy, whether that's on pastoral leases here in Western Australia, whether that's other regulatory support as well. So there are manufacturing opportunities, there's renewable energy opportunities, and all of that needs government and business working together, because we still need to get the relevant approvals. We need to know that we can use the land for that purpose. So there's a great opportunity here. I think that there is a recognition that this is a significant opportunity. We just need to accelerate because we're moving at pace. We've set a very ambitious target to be carbon neutral by 2030. So to achieve that, we actually need to be making these investment decisions today, and we need to have the right support so that we can actually either use the land or install manufacturing capabilities. There's a range of different approvals that are required to see this vision through to reality. We just want that to happen at the same pace that we're willing to invest.
Onto the pandemic, Fortescue has rapid antigen testing across some of its mine sites, I believe. If the supply of the COVID vaccine was not an issue and it was available to everybody, would the company mandate vaccination for staff?
Well, we haven't made a decision on mandating vaccination. Our view is rapid antigen's really key, so we're testing everybody before they go to site. So it's going to be a combination of testing, and obviously vaccination is key as well. But we don't know the vaccine hesitancy rate yet because vaccination hasn't been readily available to our entire workforce. So we're going to work with the workforce. We know part of our culture is a strong focus on safety, looking out for our mates and ourselves, and by doing that, that would actually support our team members getting vaccinated. So we'll wait and see. We'll wait and see what the vaccine hesitancy rate might be, but we're really focused on making sure that we protect everybody who works at Fortescue, and rapid antigen testing is also key to that protection.
And just on your view on the economy, we know that the lockdowns in New South Wales and Victoria have caused some experts to look at the possibility of a contraction in GDP for next quarter. What's your economic outlook?
Look, the resources sector continues to make a very significant contribution to the West Australian and the Australian economy. We continue to see very strong demand for our products. We're generating significant export revenue, royalties, taxes, employment. The ongoing restrictions can have caused some challenges for some of our team members who do reside on the East Coast. We're working with them and supporting them, whether they want to temporarily or permanently relocate to Western Australia. There's no doubt it's causing some challenges, but the sector that we're in, we're continuing to see very robust demand and generating that very strong economic support for the nation.
Elizabeth Gaines, great to talk to you. Thank you for joining us.
Thanks, Catherine.